Welcome back. Now, a combination of companies choosing to list elsewhere, private firms buying up public ones, and investors shunning UK shares has led to 213 firms leaving the London Stock Exchange since 2016. In the first half of this year, just 5 companies made their debut on the bourse, whilst the most valuable company listed on London's FTSE 100 index, AstraZeneca, is reportedly considering moving its London stock listing to the United States. Naeem Aslam, Chief Investment Officer at Zaye Capital Markets, joins us now to unpack the growing concerns about the UK's appeal to public companies. Thank you so much for your time, Naeem. Now, the CEO of the London Stock Exchange noted a shift in how the UK public equity market is viewed. She said that there's a language of risk rather than a language of opportunity. What has led to this change in narrative?
Look, London used to be a highly attractive place back in the 1990s and maybe early 2000. There are so many self-inflicted injuries that this government and the previous governments, they've taken them upon themselves. And that is the easiest and the simplest way to do that. For example, Brexit is one of them. That evaporated very much liquidity in the stock exchange. That is one of the major factors when it comes to the listing. You wanted to see a higher liquidity. So with the Brexit, we see a lot of those problems. Number 2, investor confidence. Not a clear reflection of the current government, but you cannot say that the current government isn't also responsible, but the previous governments for sure. Investor confidence from the current government and the previous governments have been immensely, devastatingly impacted the whole of the UK, and especially for the startups and especially for the established and the growth businesses. Because if investors are not ready to put money in this particular part, why would you want to have your IPO on a stock exchange where there is no liquidity? There's very little investor confidence. And on top of that, which is the really cherry on the top, is the wealthier people, because of the tax regimes, the overloading burden of tax, they're leaving the UK because they don't want to live. They want to live where there are better opportunities, such as the United Arab Emirates. You see the headlines every now and then that they're leaving because of higher taxes. You wanted to tax the rich, this is what you get. You get less listing on London Stock Exchange. You get the existing companies wanting to move their listings from here to other ones. And then on top of that, you've got a huge red tape around the pension funds, where and how they can invest.
So would you say, because I note that the fundraising from IPOs so far this year is at a 30-year low. And you're actually saying, with all the regulatory hurdles, why would companies want to IPO? But I'm wondering also, because you wouldn't necessarily say that there's a lack of appetite to raise capital in the UK, just in the public market. And I'm wondering then, does that also signal then a preference to raise capital in the private market, and maybe there's more movement there?
Well, even in the private markets, among the colleagues, we're working especially in the M&A space, there is incredible amount of uncertainty. And the main uncertainty is that the current government have started to look a little bit shaky, like whether it can control the narrative and stance that it wants to implement. Because first of all, we're going to have another budget, which is going to be absolutely devastating for the businesses. On top of that, a real concern, if this government falls, God forbid, we get to see Nigel Farage as the next leader of this country, we're going to see devastating divide in the whole of the country, because their particular narrative is going to be very much about dividing the country further, rather than uniting them, rather than creating ambience and environment where businesses can flourish. I think we're going to see perhaps a lot more chaos. So all of these particular elements, again, it's boiled down to whether it's a private market, whether you are looking to go public. if the investor confidence is not there, if the wealthier people are not there to fund these particular ventures or the startups in those particular cases, then they will find alternative places which are providing very clear guidance. Now, I'll give you a very simple and a small example of that one.
Yeah.
In the UAE, not that I'm favoring any particular
Yeah.
jurisdiction, but
Yeah.
you have to speak about where the national airline carrier is now allowed to accept cryptos. I mean, that is the level of the adoption, clarity, regulation that you have in that
Okay.
particular part of the world. And Donald Trump, on the other side, he is promoting cryptos. He is promoting the digital assets. He is promoting innovation. He wants to become the US, the center of that, and that is why we are seeing huge amount of influx of capital in that particular whole area, which is bringing companies within this particular sector to come on the market, do their IPOs. If you are involved in the digital asset space, you will not be looking London as your default market, because when the regulations are not clear, why would you want to go into this particular market in the first place? You wanted to go where the capital is, where the regulation is, where the clear guidelines are, and less red tape. And these particular jurisdictions, UAE and of course the United States now under Trump presidency,
Yeah.
they provide you that guidance and naturally becomes your habitat to grow in those particular ecosystems.
It's quite interesting because here in South Africa, we have had companies moving their primary listing from our own JSE to the London Stock Exchange. But then you're seeing a company like AstraZeneca, the most valuable on the FTSE 100 in pharmaceutics, mulling a listing in the US. And I'm wondering then if there are just certain sectors that are more vulnerable to this risk aversion that we're seeing in the UK?
I think it's a sector-wide really risk. It's not one particular industry, it is not one particular company, it is not one particular sector that you wanted to call it. It's a broad base. You can paint the whole picture with the one brush when it comes to the UK. But you could be a bit more specific and certainly give you an examples like how I have given you the examples for the digital asset space, because you look just look at the US market, just look at the amount of companies going public and then doing making so much noise, whether they're in the custody operations, whether they are in the mining operation of these particular digital assets, or anything in relation to that. I mean, when was the last time that we have seen a really great innovation in the healthcare sector from the United Kingdom, which used to be Oxford, Cambridge. These used to be pretty much the heart, the respiratory system for the whole country to bring those particular innovations. Where is everything? You wanted to clamp down immigration, you wanted to divide the country, those are the narratives you wanted to promote, then go ahead. You are pushing yourself towards another disaster.
Yeah. I'm wondering also, Naeem, if we're not also this narrative of, I guess, lack of appetite in the equity market. I wonder if it's also not a case of discounting the effect of the shaky macro environment as well.
Well, look, the shaky macro environment, I think this is where you have to give credit to Bank of England, because where it becomes, you have to give them credit that they are doing their best in order to lower the interest rate.
Yeah.
Have they done a brilliant job in bringing that particular interest rate? Certainly not, because interest rate, look at the European Central Bank, where the interest rates are, where the interest rates have been, what are the different products that have always been. In the UK, you are still stuck with a 5-year or with in terms of a term that you agree with the bank. Over there in Europe, you can have a 30-year term, fixed term, and then great, off you go. But we've only started to see those particular products, and because those are new products, the risk of and the appetite is very little with that one. So we should see a little bit better momentum on the macro side if the followings happen. Number one, We want to see lower interest rate. And I think this is Donald Trump is right on the money. He wants to cut it down by, 100 basis points, 200 basis points, because of interest rates at the current level are evaporating disposable incomes. It is hurting investor confidence. It is hurting business investments. Number two, more at the same time, you wanted to unite the country rather than having those political moves where you are trying to divide the country, because division is not going to yield you anything. Number three, have a clear framework for innovation and bring people who are geared to do that, incentivize them, create a structure for them, help them, like how we can see the UAE, the whole of that particular MENA region has been doing it for the last number of years. And then that is why we are seeing a lot of influx of capital, influx of talent, influx of innovation. Yes, we have not seen a homegrown technology over there in the UAE, but you will see that, right? Again, I'm not favoring the UAE. I love UK. I love London. This is my city. This is where I live, and I love it. But politicians, the policymakers, needs to get their act together for us to move forward in the right direction. Less red tape, more stable environment, lower interest rates so people can feel confident, and then less involvement in the geopolitical escalations. Because that is having a direct impact on our lives and on the normal citizen life, because the prices are going up. You don't want to go and then taking actions like Brexit, which is literally cutting into your own flesh, and then the public is paying the price.
So Naeem, would you say that then the job of giving life to the UK public equity market rests solely on policymakers, or is it more of a collaborative effort, or maybe do other stakeholders also need to be pulling their weight to meet them halfway?
Well, look, I think policymakers need to do things first, right? Because if you are trying to choke the elite class, i.e. the wealthy class, then you got no money left in the system, right? So who's going to fund that particular infrastructure or that particular venture? So you need to provide a more stable environment to begin with.
Okay. Well, thank you so much, Naeem. Really, really appreciate your time. Of course, this is a conversation that has garnered a lot of interest in the last few weeks, and we are going to be watching those developments very, very closely. That was Naeem Aslam, Chief Investment Officer at Zaye Capital Markets.